We all have goals that we want to accomplish in our lives, such as starting a business, purchasing a home, or getting married. Yet, financial challenges frequently arise and impede us from accomplishing these goals. As a result, we're left wishing that we had done some financial planning to pay for the essentials and cover any unexpected occurrences that may occur in our lives, and that we would still have enough money to spend towards our goals. If this has happened to you, likely you do not have a comprehensive plan for your finances. A financial plan helps you meet your present financial demands. It offers a strategy to achieve future financial stability, enabling you to move forward with your goals and making it possible to meet your existing financial obligations. But how can one go about this? And will having a budget not limit your personal life? Well, let me guide you through 4 ways to set up your finances right. 1. Start a rainy day fund and emergency fund. Unexpected expenses are unavoidable. And even though levels of savings reached historical highs at the beginning of the COVID-19 outbreak, the Federal Reserve Bank of St. Louis found that just 2 years later, those levels had declined dramatically. Financial surprises are never welcome, whether as an unexpected high utility bill, an unexpectedly expensive car repair, or an unexpected medical emergency. On the other hand, a savings account for unexpected expenses can make dealing with a crisis less stressful and help you avoid a financial emergency should one arise. That's why a rainy day fund designated only to provide financial protection against unforeseen costs is essential. It functions as a financial buffer that can cover unexpected rises in the cost of living or arbitrary expenses, allowing you to avoid financial setbacks and maintain your standard of living. The goal here is to have enough money saved so that you won't need to use a credit card or take out a loan with a high interest rate to pay for any unexpected expenses. Think of savings for a rainy day as money set aside to deal with little inconveniences. As the name suggests, its purpose is to assist you in dealing with the everyday difficulties that life inevitably brings your way. On the other hand, emergency savings are more substantial and are intended to cover the storms of life, so you will be covered amid continuous financial troubles, such as the loss of a job. Finance experts advocate putting away enough money to cover 3 to 6 months' living costs. Some even propose setting aside enough money to cover 1 year's expenses. But how much money should you put away in your savings account for an emergency? It is essential to evaluate one's financial circumstances to establish the right level of savings for oneself and one's family. However, you shouldn't let that amount scare you. It is preferable to have some savings set up for emergencies rather than none at all. Start with a target within your reach and put away a small amount of money every month until you reach that total. If possible, set up an automated transfer to ensure you make regular deposits. As soon as you reach your objective, you can evaluate whether you need to continue adding to your fund and decide if it is enough. In the end, having a well-stocked emergency fund allows you to deal with unexpected changes in your finances without taking on any extra debt. 2. Create a budget for each month. How can one ensure that they have enough money left over each month to pay for housing, food, insurance, medical care, repayment of debt, and fun activities if their monthly take-home salary is, for example, $2,000? That's a lot to cover with such a small amount. However, the solution to this problem is to create a budget. A budget is a spending plan that accounts for all the money you have. It is not magic, but it does represent a life with far less stress and a greater degree of financial independence. Creating and sticking to your budget is easy if you follow a set of rules, but the word budget frequently receives a negative connotation. People have the misconception that creating budgets is difficult, time-consuming, and restrictive. But hear me out. Living on a budget is very rewarding. The first thing you need to do is calculate how much money you bring in monthly. You will need to determine your net income, which is the money you make after taxes have been deducted from that total. If you work for an employer who issues a paycheck regularly, whether in a part-time or full-time capacity, the amount indicated is probably your net income. You should then proceed to compile a list of all the monthly bills that you incur. It is also a good idea to add specifics regarding the amount of money you put away each month into a savings account, whether it be a traditional savings account, a high-yield savings account, or a personal retirement. After you have made a list of your monthly expenses, divide them into 2 categories. those that are fixed, and those that are changeable. Rent, food, insurance, and transportation are fixed costs everyone must pay. The amount you spend on things like your gym membership or eating out is an example of a variable expense, which allows for greater leeway in budgeting. If money was tight, you could always cancel your gym membership and cut back on how much you spend on eating out, but probably you will always be required to pay your rent or mortgage. The final stage in developing a budget is to examine how your monthly costs stack up against your monthly net income. If you find that your expenditures are greater than your income, you'll have to improve your spending habits. Wait a minute, did you know that subscribing to my channel means you'll never miss a video on financial planning and budgeting? Plus, you'll find a link to my monthly budget trackers in the description below. So go ahead, hit the subscribe button, and take advantage of those trackers. Your wallet and future self will be cheering on you. Now, let's get back to the discussion. 3. Track your finances. There is a large number of applications, programs, and tools that you may utilize on both your mobile device and computer to get and stay on track with sound financial practices. One of the first things you should do to get your finances off to a good start this year is to keep your financial data organized. This may be accomplished through a personal finance app on your mobile device or through accounting software in your home office. Apps for tracking your budget and expense, such as Mint, NerdWallet, Pocket Card, and YNAB, are available for free or for a monthly fee of less than $10 and can assist you in establishing a framework for your life that will allow you to adhere to a financial plan and achieve your goals. These applications connect your bank and credit cards accounts to keep track of your earnings and expenditures automatically. Moreover, they come with tools that allow you to customize a budget for yourself and assist you in remaining committed to it by tracking your success. This can assist you in pinpointing areas in which you should reduce your spending and identify places where this money can be reallocated instead. For entrepreneurs out there, purchasing an account software such as QuickBooks, Zoho Books, or NetSuite is beneficial. When the time comes for filing your taxes, this will not only simplify your life, but also save you time and help you stay organized. They also eliminate the requirement to create invoices and receipts for your clients and customers, so you won't have to look elsewhere for assistance with these jobs. Accounting softwares may provide financial reports that can help you identify areas in your finances that can be improved and simplify financial data that would otherwise be difficult to comprehend without in-depth knowledge of accounting. 4. Come up with the necessary bookkeeping procedures and schedule them into your calendar. Using a calendar to keep track of your finances is a simple and efficient method to keep your finances in check. Apply the same principles you use for planning your job schedule to your finances, and check in with yourself regularly to ensure that you meet the goals you set for specific days of the week or month. There are many ways to improve your scheduling skills to stay on track with your annual financial goals, but we have compiled for you a few of the most important things to keep in mind throughout the year. First, put your savings on autopilot. By setting up recurring transfers into your savings account, you may free up more time into your personal life and eliminate the need to move money into your savings account each month. This ensures that your savings will continue to increase each month without requiring any further work, justifications, or remembering on your part. Transferring money into savings or investing accounts could be something you occasionally shrug off or put off, but if you do it regularly, it can become a habit that furthers you from achieving your financial goals. Then how about you maintain a record of the bills? Apps such as Prism and Mint assist you in keeping track of the dates on which your payments are due and in paying those bills in a centralized location. Consider setting up automatic payments for these bills so that you may reclaim some of your time and avoiding incurring any penalties or late payments. Now, examine the state of your finances. Create alerts to remind you to review your bank and credit card statements to look for unauthorized transactions or monthly subscriptions that you may have forgotten about. This allows you to look for areas in which you are spending more than you would like, enabling you to enter the following month with a heightened awareness of the purchases you make in those areas. It is easy to feel overwhelmed by the prospect of getting your finances for the year, but doing so is an essential step towards achieving financial independence. While using personal finance applications, accounting software, and a proper calendar management system are not foolproof ways to manage money, They are helpful tools that will point you in the right direction. That's all from this video. What other ways could we have added to improve our personal finances? Comment down below. See you in the next one, and don't forget to leave a like and subscribe.